All right, welcome to The Explainer. Today, we're diving deep into Amazon. The stock is sitting at a really critical point, and the charts are telling a fascinating story. So we're going to break down all the technical data to figure out what could be coming next.
So here's the million-dollar question, right? Is this recent dip in price just a little pullback, maybe a golden buying opportunity, or is it a warning sign that there's more trouble on the horizon? That is the big question we're going to unpack today.
Okay, first things first. Before we can figure out where Amazon might be going, we've got to get a crystal clear picture of where it is right now. So, on October 10th, 2025, the stock closed at $216.37. Just lock that number in your head. That's our starting point, our baseline for this whole analysis.
And this right here really gets to the heart of the matter. What we're seeing is a classic battle, You've got this immediate negative pressure pushing the stock down, butting heads with this underlying long-term strength that's been there for a while. It's a real push and pull.
So let's dig into what's actually creating this conflict. We're calling it a tale of two trends, because that's exactly what it is.
This quote from the analyst just sums it up perfectly. It's like a technical tug-of-war. The short-term feeling is pulling things down, but that bigger, long-term picture is still pulling up. And here's what that tug-of-war looks like in practice. On the left, you've got your short-term signals. The price has dipped below its 50-day moving average. That's a classic bearish sign. But then you look to the right, and the long-term signal is still bullish because it's holding above its 200-day average. The stock is literally caught right in the middle of these two major levels. So how do we figure out who might be winning this fight? Well, we need to check the stock's vital signs. Think of this next part like popping the hood and looking at the indicator dashboard. It's like a quick health check for Amazon's momentum.
First up is the RSI, or Relative Strength Index. All this does really is measure how fast the price has moved. It tells us if a stock is getting into overbought or oversold territory. Now, Amazon's RSI is sitting at 40.14. So what does that mean? Well, a reading below 30 is usually considered oversold. We're not quite there yet, but at 40, we are definitely leaning that way. It's like a rubber band that's being stretched and might just be ready to snap back.
Next on the dash, let's look at the MACD. This one's all about tracking the momentum of the current trend, both its direction and its strength.
And its value is negative 1.71. A negative MACD is a pretty straightforward signal. It points to bearish or downward momentum happening right now. This just confirms that the short-term pressure we were talking about is absolutely real.
And finally, we have the Williams %R. This is another momentum gauge, but it's really good at spotting the extreme levels.
And whoa, look at that reading, minus 96.98. This is basically screaming that the stock is in an extreme oversold condition. Anything below minus 80 is considered deep in that territory, so this indicator suggests the recent selling might have been seriously overdone.
Okay, so the checkup is done, the diagnosis. We've got clear short-term weakness, but with some pretty strong signs that the stock is oversold. So now, let's talk about the game plan. These are the critical price points that everyone should be watching. Think of this as our price map. Up top, you've got the ceiling, what we call resistance, sitting around $222. Then, way down at the bottom, you've got the floor, or support, and it's a really strong floor. This zone between about $213 and $214. And our current price, it's right there, getting squeezed between the two.
So here's the kicker, the most important takeaway from that map. Just look how much closer the price is to that solid floor than it is to the ceiling. The stock is basically knocking on the door of a major support level, and that makes this a make-or-break moment.
And this all sets the stage for the final showdown, the bull versus the bear. Let's break down exactly what each side is hoping for, what they need to happen next to win this thing.
First up, the bullish case. For the optimists, it's all about the bounce. The game plan is simple. The price has to stay above that critical $214 floor. If it can do that, those oversold indicators we saw could kick in, attract a wave of new buyers, and cause the price to bounce right back up towards that $222 ceiling.
But on the other side, you've got the bears. Their case is the break. If the price fails to hold that line and breaks below the $214 floor, well, selling pressure could ramp up fast. That would confirm the downtrend is for real, and the next logical stop might be the recent low down around 211.
And this final quote from the report just wraps it all up perfectly. A sustained break below support could signal further downside, while holding above could indicate a potential bounce. It really is that clear-cut. Two very distinct paths forward.
So, there you have it. The battle lines are drawn.
You've got the short-term pressure pushing down, but that heavy-duty long-term support is holding the line, for now. And those indicators are flashing oversold. The stock is at a true crossroads. So the question is, which way will Amazon break?